Because when you know better, you invest better. Join us and experience the difference today. TFNN, educating investors.
The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-873-7618. Now, Larry Pesavento.
Okay, folks, I put up the chart of the crude oil. This is the video that I sent out last night early in the morning. It was around 2 in the morning here when the market had taken out the highs of the 24th of September. Remember, that was a very important high, and you can see here we went up here 3 times that we stayed at that level, never exceeding this by more than 10 pips. So I said, be really careful up in here because this is the fact that this should have been a sign for breakout, and it certainly wasn't. Now, yesterday, when we sent the video out on October 1st, we said to look for the 61 or the 382 pullback, and of course, there it is right there, and we certainly didn't go up. But when you have a new high, and this 382 is still valid, so we're just going to look at it right now together because we have a new high and we're sitting just about at support right here. There it is right there. Now, if you believe that there's going to be really strong support here, you see the number is 70.09, and here we are 70.09. So far, the low has been 69.86, so you know what your risk is. You go below that, there's something wrong. But this has been 3 hours it's been sitting here, folks. This is telling us that maybe there's some really good support here. Now, I am a little bit bearish on just about everything, and so I'm going to pass on that, but I did get a tiny bit of a short offer personally up in that area. But now let's take a look at the other positions that we have. Now, we recommended the corn, if you'll remember, based on the long-term daily on this at 432. It was setting right at there's the 382 right there. The high has been 34. We recommended the stop be put at 436. Now, it hasn't backed off at all. 3 or 4 cents is all, but we're still in this zone where it still looks like a viable trade. It might not be viable in 20 minutes, but by golly, that's what you're looking at right now. And you know what your risk is, and that's the only thing we can do. Folks, everything that I try to do here at TFNN is based on protecting the backside of every one of us, including myself, so that when we do put a trade on, that we're able to look at it from a standpoint of how much you're going to risk. That's what you need to focus on. In fact, when you're playing poker, one of the silly things that you can sit down after you played enough hands like I have, you can sit down and when the player starts playing almost hand or every other hand, you know that you're playing against a rank amateur, because a real good poker player will only play about 1 every 6 hands. And if you find a poker player that's playing about 1 out of 10 or 12 or 20 hands, don't play against that dude because he's better than you. That's an old little rule I learned from one of the famous players that has long since passed away. Amarillo Slim, he came to Tucson a few years ago and gave us a little lecture and took 20 of us out to dinner for a big steak. It must have cost him $500, but we had a great time and it was really a lot of fun. Okay, that's the corn, and those are the main ones. And then we also have we recommended 382 retracement sell on the hold on one second, I need to get this up here in the stop the front door and raise the rent. The British pound has been doing quite nicely for us. You remember, here's where we were on Monday when we were doing the show. We were back at this level right here, setting right at the long-term weekly. And now you see we have hit that, and we have not taken out last week's low as of yet. You see we're very, very close to doing that. If we do that, that means there's a high probability. Now, you've locked in $1,000 on this, folks. Just looking at this on a 60-minute, you can see this is where we sold it right up in here. 34.10 was the actual number. There's where we were on Monday. Remember, we had the 135 pattern setting in there, setting right at 134.10. It stayed there for, well over 3 or 4 hours, and now we've had to move down. And today's action is relatively important because, you had a little bit of a rally here. In fact, a pretty strong rally. It rallied about 80 pips. But if you like A, B, C, D and 382, you go from your high, and there's your X, A, B, C, and guess what that is, folks? You see that number right there? That number is 382. So as long as you don't get above that, you're still in a really strong downtrend. And if we close below here and we break below these lows of last week, then you're going to have some fireworks coming in. Now, it's still a long way until that happens, but in fact, it could happen. That's the main thing. All right? Just want to give that a heads up on what we're looking at right here. We did have one losing one today, one that we did yesterday. If you'll remember, we were selling the cattle up here. And hold on one second. You see, we had, there was yesterday's action in the cattle. We sold it right here. The market came down. It stopped. You don't see it on this one, but let me get this up here so you can see. This was the open right here. It opened and just exploded. And if you have any belief in these numbers, after you've had a move that gives you about a $650 profit, you want to have your stop in right here. And you're going to break even. There's nothing else you can do about it, especially when you get above this level right here. That's basically where we sold it. So once we went above that, that was telling you that there was something wrong. In fact, if you would blowing this up just a tiny bit, and that's what we're going to do here, hopefully, with a little luck. All right, we're going to just clean this out. We'll follow that little low right now. Cattle is a very heavily traded commodity by the hedge funds, folks. So as you can see here, all we were able to do today was after the market opened was stay right at the 382 all that time, 85.47. So once you got above this, it's on its way, and that's that's what you want to remember. And it's the probability of each trade that you do, folks. It's not the number of trades that you win. It's the number of trades that you take a very small loss on. That's the real key to looking at. So we're done with the cattle. We'll watch it again, but look at this on the daily. You'll see why it turned bullish, because there's where we were yesterday. And you see when we took out that number, that broke out all the resistance that we look for. See, there was the resistance at basically 186, and now we're 187 and a quarter. And that's not a really good sign. So what you'll do is wait on the cattle and see, what happens with it from that level. I want to give you both sides of this, so as we're watching it unfold, you'll be able to see how things are, really starting to pick up steam on some of these things. Okay, now I also want to take just a moment here to talk about this stock right here. This is really unbelievable, folks. I'm going to talk about the Chinese market at the first break because I did a lot of work on the Chinese and Hong Kong market. But this is Rio Tinto, which is out of Australia. And I want you to see this, folks. This is not that anybody wants to pay any attention, but, this was what they call an A, and this is what they call a B, and this is what they call a C, and you can see it right here. There's A, B, C, D. There's a 3 drive to a bottom pattern, and you can see here, this was before China did anything right in here. See, somebody at Rio Tinto, here's this week, okay? Now, somebody at Rio Tinto last week already knew that something was happening. See, right here, China has been up the last 2 days, 8% and 7%. That's 15%. Let's say the Dow was up 15% in 2 days on 43,000. Well, that means the Dow would be up just about 8,000 points in the Dow Jones. And as last I checked, the Dow Jones isn't anywhere near that price. So it's going to be interesting.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, education educating investors.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
Sharpening your skills as an investor is like getting better at playing a musical instrument. You have to practice, sure, but you also need excellent instruction from experts. At TFNN, you'll get advice and guidance from the authority in technical market analysis. And it's not just dry, tedious text either. TFNN airs live financial content streamed live on TFNN.com and TFNN's YouTube channel with Tiger TV. Live every market day from 8:30 a.m. to 4 p.m. Eastern. For free. Each host is an experienced trader and gives their take on the market while taking calls and questions live from around the world. From the moment the market opens until the closing bell sounds, Tiger TV has 8 different shows with expert hosts to help you make the right moves with your money. Watch online at TFNN.com or on TFNN's YouTube channel and become the investor you were born to be. TFNN, educating investors.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Okay, folks, this is silver. Today you can see we had $1, a little more than, well, actually we went up $1.50 in silver, 7,500. We gave quite of that back, but what I wanted to show you was after that top was in, you'll see when it was supposed to go to this level here, and it went almost to the 78% level, mainly because of the strength of that. But if you go by the old rule that we look at after you have a big move down, is to watch to see how it handles the old placard that old Johnny's got lifted up over there. The old 382 that should say some support or resistance comes in at 32.05, and as you can see, the high after that was 32.07. So that's working okay. Now we're starting to back off. Whether this means A, B, C, D or not, I don't know. Now we're going to talk on a little fireside chat with the old cowboy here. You know, folks, I got a lot of experience, seen a lot of charts over the years. I'm going to give you my 2 cents worth, and if you pay more than that, you've overpaid. So here's what I'm thinking. Here's what we get up here. We're going to take a look at the first one is the Hong Kong stock market. We're going to get it up here, right here. And this has not been quite as bullish as the Chinese market, different countries, of course. But as you can see here, we hit 22,688. We didn't take this out, folks. It missed it by 10 points. This is the daily chart. Now, if you look at the gaps that you see here, I mean, this is really incredible. We had big stuff back when it was a bull market, but look what we've got now. I mean, this I'm going to show you on the weekly because I think this is the outlier right here. I think China did everything they could do except throw the kitchen sink at it, the markets. And the only reason they didn't throw the kitchen sink is they couldn't find a plumber that was capable enough to unhook it so they could throw it. That's my guess. So look at this on the weekly now. You're going to see that, folks, all this is doing is making a retracement right here, just like it did right back here in 2022. See that monster move? Now watch this. I did the ABCD here because you know when you have a gap that you have to take the CD leg and multiply it by 1.27. That's exactly what I did. See, when I have that in there like that, and I look at that, you see it tells me the CD leg is 1.27. AB, BC are correct, but CD has to be increased because of that gap. Now, if you look at that, and you remember what the news that's going on here is spectacular. Let's get this out of the way. I mean, stop and think. On Monday, the stock market was up 15%. on the I think what it was in China, and then on the next day it was 7% and another 7%. It's the equivalent of 8,000 Dow points this week, if that's what happened. Now, we haven't done that, but you can see that move right here was exactly like this move right here. And if we take a look at this, we'll move it over from a long way away, where we were way back in 2017. You'll see this level right here comes in almost exactly at the 382. At the 382 is right here. We went a little bit above it, but this gap is the real thing. Now let's take a look at China. All right, we're going to look at the FXI, and this is truly amazing stuff from my perspective, folks. But like I say, sometimes I'm right and sometimes I'm wrong. But the one thing I know is I'm never in doubt. All right, now here's the Dow. Here's the FXI China. The thing is, I think this is not in. Let me refresh. Hopefully we got the day's action in. Yes, no, we don't. This is still, no, this is the first. It is in. There's the action that we're seeing right now. So that data is in. And you'll see that we've completed it. Here, we're going to do the same thing, A, B, C, D. Now, you got a bunch of gaps here. All right, so you got to take the CD leg, and you got to multiply that times 1.27. So I come over here, and I change it from 1 to 1.27 and see if it's close to the numbers that we're looking for. And there it is, 35.09 right now. At the close today, it closed at 34.30. Try it again, Larry. 34.88. Now, why in the world? This is when they first started doing the stuff with China, the adding stuff. This market had been rallying, okay? And they didn't see the importance of this sell Gartley here. By the way, folks, when you see a sell Gartley like this and they gap up the next day, don't do it. The big problem is you never know whether they gap up or not. So you're not doing too well with that. Now let's take a look at the weekly. I think this is the outlier event, folks. Look where we are, folks. Going back to where the market made a high way back here in 2020. I think that was the high in the Chinese market. Let me double check. I could be mistaken. No, that was the high. You can see back here where we had, there's 3 drives to a top. 1, 2, 3. This was just a tiny bit higher than this, but it made it a 382. And as you can see, the ABCD stuff going right into it at the high, and bang, down she came. And all we're seeing now, folks, is a real big rally. It's right now it's at 43% of the move here. So I think that's the outlier potentially in the market. I don't know if I'm right on that, but that's what I think it is. And remember, you have to rely on your stops and your money management to keep you from getting hurt on these. So let me get this out of the way. And someone asked me, as always, to take a look at Mr. Appel, who's down by the well. And we're going to get a quick look at this. And I'll be doing a lot of work on the newsletter this weekend, folks. So pay attention. It's got going to have a lot of stuff in it. Here's Apple right now. You see it's down on the day. It's doing, look at this. Down on the day, if you like ABCD, look, there's your ABCD pattern right here. It probably comes in exactly at the 61%. I'll stop it. Exactly at the 61% level. So we're going to find out if that's the case or not. So up comes in at 50%, and it's rallied a couple of bucks off there, but it's left a pretty big gap in here. But if you look at it, it's already exceeded the 3.8. No, maybe not. Let's get over here. Oh, this might be a good trade for everybody. There's your high the other day, and there's your 382 right here. And it's been here for 2.5 hours at 2026, 2027. So this is important because if it can pop above this, we got a big gap in here. But if this fails, then that is where the problem will allow us to have some fun. All right, now let's move on here, and we're going to look at Tesla. And we'll get started here with Tesla in just a second. And Tesla starts with a T, as I recall. And, oh dear, just a minute, TSL. There it is, right here. And it had a gap down today, but did it do much? No. And it's bouncing back. There it is. All right, there's the last major low right here. If this is correct, and we are correct with our premise of 382, from this low right here to that high, that should be exactly 382. So let's look. Well, you could took either one of these. This is the bigger one, so we'll put it in right there. And that was right on, but there was a lower one right back here, and that's probably exactly right. And look at that, that's exactly right. From this low right here to that low right there, and it's up $6 from that level. So if you're day trading Tesla and you follow some of that stuff that we talk about here, you'll see there was your exact 382 off of this one. This one here, this one here is actually not the real one, because this took 1, 2, 3, 4, 5, 6, 7 days to form. This only took 1 day to form, 2 days. So you want to take that one, and you could also take this one, but there's the one that did it. That's all I can tell you. Now let's look at it intraday. Let's take a break. We got Jeff Hughes coming up, and we're going to find out if Jeff has got some good stuff for us, which I know he always does. So please stay with us, boys and girls.
The Gold Report. As a precious metal, gold is still king. It continues to hold the most effective safe haven and hedging properties across the global major trading hubs of the London OTC market, the US futures market, and the Shanghai Gold Exchange. The Gold Report. Tom O'Brien publishes his weekly gold report every Monday morning for subscribers, consisting of coverage of the XAU, HUI, GDX, the dollar, bonds, the South African rand, as well as 25 different mining equities with specific buy-sell recommendations. The Gold Report. New subscribers get a 30-day money-back guarantee, so you have nothing to risk. Subscribe to Tom O'Brien's Gold Report newsletter now at TFNN.com.
If you spend any time online researching trading techniques on how to begin your trading journey, you've no doubt come across many folks who push Forex trading as a way to make big money quickly. Unfortunately, there are equally as many stories of these so-called Forex professionals just looking to make a quick buck off aspiring traders without actually teaching the ins and outs of the Forex market. This is what sets Teddy Keckstack's The Tiger Forex Report off the riffraff. Every Monday, former Chicago Mercantile Exchange member and author Teddy Keckstack releases his Tiger Forex Report newsletter, where he dives into the complex world of Forex and takes time to actually teach you his methods that have made him so successful in the fast-paced and rewarding world of Forex trading. Furthermore, all subscribers receive access to archived live streams of Teddy's, where he provides university-level education to help you in Forex trading. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Forex awaits.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
This portion of Trade What You See is brought to you by Direxion's daily leveraged and inverse ETFs. Whether you're a bull or a bear, you choose the direction. Visit Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
Okay, we're back, folks, with Jeff Hughes. Jeff, are you there, my friend?
I am here, Larry. How are you?
Well, I'm not doing too good. I was about 30 seconds ago, but when I tried to bring up your chart, it says it couldn't preview file, problem downloading pages, retrying, and I've been trying and trying. Could you just talk to us and anybody that would like a copy of these charts? I think I can furnish them to you later. Just send it to the request to Larry@tradingtutor.com. But I know what you're going to be talking about. I have a picture in my mind, so could you please do that for me today? Just because I can't see the charts. I've tried everything and it just doesn't work. So go right ahead.
I apologize for that. Sure. There's just been a cacophony of bullish stock market experts on social media, in financial media, and the newspapers, just fawning over the performance of the S&P 500, which is up 22% year to date, mostly led by a handful of stocks. But we have seen a bit of a broadening out in the last quarter, which, most bulls are very, very excited about. I've heard almost nothing about the price of gold, which is, just trounced the major averages. And it looks like you found my charts, but the key that I wanted to point out is that, the price of gold is beating the S&P 500 by over 6 percentage points. It's beating the NASDAQ 100 by over 9 percentage points year to date through the end of the third quarter. And, from my perspective, that's something that we should be taking note of. There's a message that gold is sending us, and those that aren't getting the message could be left out in the second or in the fourth quarter. That is.
Oh wow! I know. I looked at the chart. I'm here with a friend that's been a floor trader, buddy of mine, for 40 some years, and we both look and shake our head. How could the market be where it is, given the fact that all of these things that we're seeing? I looked at the charts of BMW, Aston Martin, Mercedes-Benz, 2 or 3 others, and my God, those stocks and Porsche, and Volkswagen. I mean, they've been in terrible bear markets for almost a year, just dropping like a rock. I mean, I don't understand how that could happen, but what do I know? Do you know anything about those auto stocks?
I don't know anything about those specific names, but I mean, we just received deliveries from Stellantis, Tesla, Ford, GM. All of them missed delivery numbers, and a lot of it has to do with the fact that the EV side of their businesses are really missing expectations dramatically. Even Tesla, which is 100% EVs, fell short of expectations. I mean, there was the estimates, but there were really the whisper numbers out there, and they missed the whisper numbers, and the stock has been under pressure as a result. My sense is that EVs are one of those things that capture people's imagination, but there's not much there in terms of the reality, if you will.
Okay, wow. Okay, please continue, my friend.
Yeah, so one of the things that really has our attention is the yield curve right now, which has uninverted. And, as most of your listeners are probably aware, we've been in a situation over the last, say, almost 3 years where the 10-2 yield spread, Treasury yield spreads, have been negative. And it just over the course of the last 30 days turned positive or uninverted. We've been saying in our research publications to our clients that, the inversion's really just the shot across the bow, Larry. It's the indication that a problem is developing. But these yield inversions have tended to last, many, many months, and they tend to precede recessions by as few as 10 and as many as 33 months. The point that we really need to focus on is when the curve uninverts and begins to re-steepen, as we've seen in this last month. That's when the torpedoes are in the water. That's when the recession is basically impending at this point. It's just a question of exactly when. And, some of the other data that we're seeing, particularly unemployment data, supports the notion that we've maybe actually entered recession already in the U.S.
Wow. I'll tell you. Okay, please continue, my friend.
Well, another area that we focus our attention on is this the ratio of high yield bonds to high quality bonds. So in other words, we take the high yield corporate bond index divided by the investment grade corporate bond index, and we just follow that trend. And that trend has been straight up since the end of the first quarter in 2020 following the COVID crash. But for the very first time, that uptrend has breached its trend line just this last month. And it looks to us like it's very close to a breakdown. We have, this low quality, overweight in our model portfolio on watch for a potential reversal, at which point we would then favor high quality bonds. We've been basically long low quality or junk bonds for the past 4 years, and it now looks like we're going to get a signal triggered here within days possibly that junk bonds are now a sell and high quality bonds are a buy. And so usually when that happens, it happens coincident with a recession in the U.S.
Okay, I have a question from one of our listeners before the show started is, how can Treasury bonds go down when the Federal Reserve has dropped interest rates? I tried to tell him that, this is a forward thinking, it's a futures market, and that's why they do that. Do you have a better explanation? I mean, I've seen it happen so many times when they drop interest rates. Bonds, instead of going up, what you'd think they would go, they go down. And the last 3 cycles, they've been that way. And it seems they're doing the same thing now with the big drop we're having today.
Yeah, so what's happening is the curve is flattening as opposed to, what we're seeing is a flattener, basically. So the Fed cuts rates at the short end, but it doesn't control the long end of the curve. And so, this compression that we're seeing in rates is both affecting long-term expectations. And so, we got some fairly positive employment data from the private payroll number at ADP this morning, a little bit of an upside surprise. This is just high-frequency data. And, of course, the 10-year bond is selling off as a result because yields have pushed a little bit higher in response to that. And I think it's just noise. I mean, it's something that's happening right now today. But, the bigger picture is simply this, that rates are headed lower, and we'll probably continue to see short rates go down and long rates remain relatively stable, possibly creep up. Wouldn't surprise me to see, the 10-2 spread somewhere between 200 basis points positive before it finally reaches its peak. That's typical.
Okay, Jeff, stay with us. We got another segment with Jeff Hughes of Alpha Insights. Please stay with us.
Many trading newsletters attempt to focus on a narrow set of equities or commodities. While this works for some, it oftentimes misses many opportunities that possess huge gain potential. But how is an independent trader supposed to scan the entire market looking for these hidden opportunities? One simple answer: the opening call newsletter. Basil Chapman, developer of the Chapman Wave trading methodology, has been trading the markets for longer than most trading influencers have been alive. And over that time, he has honed his methodology in order to accurately call movements in a wide range of equities, from semiconductors to uranium to key indices and so much more. Basil is old school, taking the time to educate the trader while also giving his insights into key indices, selective stocks, and more. Opening call subscribers also receive access to dozens of educational live streams that can be accessed at any time for your edification. All first-time subscribers receive a 30-day money-back guarantee. So ignore the pop trading influencers and start learning time-tested technical analysis.
The stock market is a delicate, interconnecting web of commodities, equities, and trader psychology. When one string of the web is pulled, it has a ripple effect across the broader market. This is where opportunity lies. But how are you to gather all of this information into one cohesive model when you're already spending your energy looking for any possible trade opportunities? Luckily, you don't have to worry about that, as Tom O'Brien has brought all important market news to you in one single newsletter, Market Insights. Market Insights provides a daily overview of what's happening in the indexes, bonds, gold, and more. Follow along with Tom daily as he analyzes the components that affect the overall movement of the stock market, giving insight into how each one plays either a bullish or bearish role. Tom also analyzes specific equities that he believes has the potential to make huge returns, and his track record proves his analysis right. All first-time subscribers receive a 30-day money-back guarantee. So what are you waiting for? Don't let the market leave you in the dust.
For traders who crave risk, Direxion's daily leveraged and inverse ETFs provide opportunities to magnify short-term perspectives with up to 3 times a daily leverage, utilize bull and bear funds from both sides of the trade, and trade through rapidly changing markets. These are highly leveraged ETFs with daily resetting designed for short-term trading, not long-term investing. Whether you're a bull or a bear, you choose the Direxion. For up-to-date pricing and performance, go to Direxion.com. Investing in the funds involves significant risk and should only be utilized by investors who understand the impact of leverage and actively monitor their portfolio. They are not designed to track the underlying index or security for more than a day. Before investing, carefully consider a fund's investment objective, risk, charges, and expenses contained in the prospectus available at Direxion.com. Read carefully. Distributor Foreside Fund Services, LLC.
This program is brought to you by Vista Gold, traded on the NYSE American and TSX under the symbol VGZ.
We're back, folks, speaking with Jeff Hughes of Alpha Insights. Please continue, my friend.
Headed back down to test that rising trend line off the 2011 and 2021 lows. So it wouldn't surprise me to see the dollar actually trade down to, say, 96 or 95 over the next several months. And what that means for the markets is that it's going to put some pressure on U.S. assets, basically. It's indicative of money flowing out of the U.S., and the question is, where's that money going? And we think foreign developed markets are likely to see a lot of that inflow. And one of the reasons we think that's the case is valuations are dramatically lower in foreign markets than they are in the U.S. The U.S. is trading at literally its top decile valuations across every valuation metric. And that does not bode well for forward 10-year annual average returns, which are likely to be around the 3 to 4% range for U.S. equities. However, if we take a look at foreign markets, especially emerging markets, we should see much, much higher
what is
returns.
That pinging
so
noise
I think money's flowing back into those markets.
Hold on just a second. I'm trying to connect with that stuff that you sent me on to show that, but I'm not able to bring it up still, Jeffrey. So I did something wrong or it blocked or something. So if you'll just continue, what we'll do here is we got about 4 or 5 more minutes here, but I do want you to spend the last minute or two talking about your wonderful letter that you send out and the results that you have, because you've done just an absolute superior job. So please continue, and then we'll finish that at the very end.
Yeah. Well, let me talk a little bit about foreign market leadership. So, we actually take a look at 15 different markets, 10 developed foreign markets, and 5 emerging foreign markets. And the largest of those emerging markets is China, of course. And China was actually up 20% in the month of September. And I know you were talking about the HSI and the FXI earlier. And, one of the things that's caught our attention is the breakout from what we believe, and we're looking at a longer term chart than I think you were, but we're looking at a breakout from a classic pattern base formation of the double bottom variety, and this push that we've had above 30 and now 32 actually projects a measured move to around $40 eventually. Now, this vertical move that we've seen straight up, I agree with you. That's gone a little bit too far, too fast. we're probably going to get a bit of a pullback. I think that pullback will probably, hold around the 32 level, at which point we should get one more push higher to 40. And that's where we would be taking profits on the FXI. We think, as David Tepper said, this stimulus in China is going to push everything higher. And so we think play the broad market for that, but be prepared for a pullback short term. Other than that, we're really focused on what's going on here in the U.S. with respect to margin debt. We've heard a couple of people on CNBC talking about how margin debt didn't make a new high, with the market's new high, and that's, a bullish sign. We think they're looking at the wrong calculation. We actually look at something beyond just the margin debt itself. We look at the free credit balance. So we look at the total credit balance, which is the free credit balance and the margin balance together. And we actually did make a slight new all-time high on the credit balance. So, from that perspective, we think investors are absolutely all in, something to the tune of $500 billion in leveraged bets right now. And we think that it's a high probability that, we're going to see that de-levering over the course of the fourth quarter as we see the S&P 500 put in its highs. And we see one more short leg up, probably to around 5850, 5900 in the S&P. And then we think all bets are off. And we think probably going into the election is where we could expect to see some serious volatility for U.S. stocks. In the interim, we think there's a great trade in China with the FXI, and we'd be looking to try and buy at 32 and sell at 40 sometime over the course of the next month.
Wow. Holy cow. Anyway, Jeff, I have a question for you. When people, this is probably a silly question, but when the people buy FXI and the market jumps up like that, I'm familiar with for every buyer, there's got to be a seller. Isn't that the case? I mean, for someone to buy FXI, shouldn't someone be on the other side of that trade?
Well, there's the biggest short position in China in history, actually, going into this. And so I think it's a lot of short covering that's been driving it up. I don't think the real money buyers have really come into this in a big way. Certainly institutions have been buying BABA and some of the bigger cap Chinese stocks. But I think that there's a lot of room to go here after this initial short covering, subsides. And so, to push this thing up another 5 points from where we are now is a nice return on your capital, and it's not out of the realm of possibilities. So I think, what's the old saying? Baron Nathan Rothschild said, fortunes have been made by buying low and selling too soon. Some people that are watching CNBC, they think this thing can go forever because David Tepper said, buy everything. We think there's a nice trade here to 40, and I'd rather sell at 40 and watch it go to 50 than hold on to it and have it, get to 40 and fall apart on me. So,
okay, let's talk about your newsletter, my friend.
Yeah, we've got a new edition coming out this Saturday. The newsletter is called Huge Insights, The Big Picture. It's available on Substack at hugeinsights.substack.com. We only publish once a month, and we cover a lot of big picture things. In fact, I mentioned the Rothschilds, and we're going to do kind of a big expose on the Rothschilds' banking dynasty, and reflect on what went on during that period and how it pertains to what's going on today. We're also going to look at a lot of things relative to the economy, relative to this China trade we're talking about, some geopolitical issues with respect to Israel and Iran and where that could take us. We're going to touch on the election a little bit, and then we're going to dig deep into our market analysis, our forecast of where we see the S&P going and why and how we see it getting there. And we'll summarize with our big holdings. And, I'll just tip my hat to gold because that has been our biggest position. We've had a 20% position in gold since January 1st, and it's really carried the ball for us.
Jeff, thanks for joining us, my friend. I'm sorry for the technical difficulties. We'll make up to you the next time we have you on the air. Okay, buddy?
Thank you, Larry.
So much,
Take care
folks.
now.
Jeff Hughes, folks, Alpha Insights. Take a shot at it. You can't miss. We'll be right back, folks.
If you're looking for potential trading setups in the stock market, then Rocket Equities and Options Report is a newsletter you should try. Tommy O'Brien delivers options and equity trades when the markets present them, using a combination of fundamentals and technicals. Sign up for Rocket Equities and Options Report today with a 30-day money-back guarantee, so you have nothing to risk. For all the details and to start your subscription today, visit the front page of TFNN.com. TFNN, educating investors.
In the world of trading, only a few names stand out like Larry Pesavento, a pros pro with over 50 years of experience. Larry has seen it all. A former Chicago Mercantile Exchange member, Larry has authored 10 books and trained over 1,000 traders with his unmatched expertise. Introducing Fibonacci 24/7, Larry Pesavento's daily trading service that turns the complexity of markets into opportunities. Published every Sunday, receive a comprehensive report packed with detailed commentary, charts, and videos that illuminate the patterns shaping the markets, with updates throughout the week exclusively for subscribers. Whether through charts or videos, Larry's analysis is your roadmap to navigating the markets. You can sign up now at TFNN.com for just $97. And with all TFNN newsletters backed by a 30-day money-back guarantee, you have nothing to risk. For all the details, visit TFNN.com. You'll find Fibonacci 24/7 right under the newsletters tab.
Steve Rhodes started his trading career as a student almost 20 years ago, and the student has now become the master. Steve won the prestigious Timer of the Year award in 2018 and barely missed that mark again in 2019, finishing at number 2 for the year. An amazing accomplishment. Steve Rhodes is committed to sharing his techniques and knowledge with anyone who wants to learn, and he shares his vast amount of trading knowledge every day in his Mastering Probability newsletter. Steve's award-winning newsletter, Mastering Probability, is delivered every trading day with updates throughout the afternoon. Sign up for Steve's market newsletter, Mastering Probability, and you'll receive access to 7 of Steve's educational webinars absolutely free. At TFNN, all our newsletters come with a 30-day money-back guarantee, so you have absolutely nothing to worry about. Visit TFNN.com and try Mastering Probability 30 days risk-free today. TFNN, educating investors.
TFNN has launched the Tiger's Den. Hosted at Discord, TFNN has been educating traders for more than 20 years with live programming hosted by a variety of professional traders during market hours. The Tiger's Den, available to all tigers and tigresses for just $1 for the year. There's no catch or added costs when you join our community of traders. Sign up today and become a part of this educational community of traders. Just visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV.
Okay, folks, just for kicks and giggles, this is the AI program for today. We just made a low here right at the 50% level. We're supposed to top in a half an hour, folks. So the last hour and a half is supposed to be down. Trade at your own risk. Not my risk, but your own risk. Okay, now we can easily go up and take out the highs from here, but watch it at this time, which is 1/2 hour, 35 minutes from where we are right now. This is a time of the day where it can easily flip and go straight up, or it can go straight down. That's true of anything that you do anytime that you're trading. So that's all I'm saying, is to watch that very, very closely. Now, as a quick reminder, we want to take a look at that crude oil to see if it in fact has held that level we were talking about when we got on the show down there at 70.09, and you can see that we've been here for several hours. It's now up to 70.33. So if you're in that trade, you don't have to risk very much on that particular trade. So that's it. The corn is continuing to work. Actually, it's against us by a penny now, but keep your stop working at 436. You become a farmer for $200, and that's about as cheap as you're ever going to have it to be a farmer. But the key to watch, though, if you're day trading and stuff, is to watch the S&P here at 4:30. There's the time. That's 4:30 New York time. We're right there. Actually, about 4:35. So watch it. If it starts down, that tells you that we're probably going to close a little bit lower. And I believe that we are in the beginning stages of a market. See, we've taken out the previous low, but we've rallied a little bit. See, we never really collapsed. There's your low for the day. We break below that 57.24, then you know you've got something that could be. But if you close higher, maybe you go a lot higher. I just giving you the odds and probabilities. Remember that AI program is only right about 2/3 of the time. But show me a baseball player that hits 666 or a golfer that wins 6 out of 10 tournaments. Not going to happen. All we're trying to do is to make a living. So live every day in an attitude of gratitude, and may God bless.